morning and welcome to the VSA Capital 5-Minute Morning Miner. It's Monday, the 13th of October. Myself and Paul is on holiday this week, so we've got Ollie. Morning, Ollie.
Yeah, morning, Andrew. How are you?
Yeah, pretty good, actually. Pretty good. That was a nice weekend. Hope you had a good weekend too. Hope all the listeners had a good weekend.
Yeah, I did, thanks. Yeah.
Goody. Right, let's start with actually what I think is some really important news on Strategic Minerals. Strategic Minerals actually was my pick at the start of the year. It's doubled so far, but it could easily double again by the end of this year, in my view. But they came out with some very interesting drill results this morning, particularly high tungsten grade, didn't they, Ollie?
Yes, it's the results from one hole. Obviously, they're doing a bigger program than that, but it shows multiple intercepts between about 440 to 560 meters depth, intercepting veins with thicknesses of between sort of 3 and 10 meters, and grades from 0.2% all the way up to 2.33% tungsten. So 9 meters at 0.5% is probably up there amongst the best. 6.7 meters at 1.17%, and 10 meters at 0.7%. Sorry, that's 0.7% copper, and then a small tungsten contribution. So I think the copper credit is going to be a useful byproduct to bump the economics of this higher. It does depend on how close these stacked zones are to each other as to whether they could be bulk mineable, and that would make this really attractive. But obviously the grades in terms of global tungsten are pretty high. You would expect to see something between 0.1% at the low end, up to maybe 1.6% tungsten. That's the global spread. Most projects are between 0.3 and 0.5%, but you would need something a bit higher that is vein hosted, and obviously at this kind of depth to make it economic.
Yeah, but look, I think the key to all of this really is we know that there is a critical metal war going on at the moment. We've just seen Trump with his tariffs on China on rare earths. But the point is that we're also hearing America is stockpiling all these critical metals. China's doing it. Australia's just announced they're going to do it. Cornwall and southwest Devon are full of critical metals because tungsten and tin and copper, they're all basically critical metals. And of course, the great thing about if you're doing exploration down in Cornwall is that you've got two process plants that are going to be built, one at Tungsten West, one at Cornish Metals. So you don't need to build a process plant. You just dig it, find it, and sell it, which makes the economics very, very different. So I think it's actually really good news for Strategic Minerals. I think there's a lot more upside. The other one down there that's listed is Tamar Minerals. We are, of course, broker to that, so slightly biased, but Tamar looks incredibly cheap. Tamar also, of course, with their Devon Great Consols, potentially has a very interesting copper mine there. It was one of the largest copper mines or the highest grade copper mines in the world when it was last in production. So there is incredible value down there. And, the world is looking for critical metals. We sit on a huge amount of it. It's just that people haven't quite understood it yet. Okay. Elsewhere, there was a little bit of news out on ferroalloys, wasn't there?
They've produced another pre-feasibility
hit the nail on the head.
I think when Vision Blue originally came in, the net byproduct cash costs were actually negative. So although it's still the lowest in the world, should it get into production, there has obviously been an impact from inflation over the last couple of years, but fundamentally, it's pretty similar to the um, phased approach to production to spread the capex, and then using a whole host of byproducts to get the net cost down to a very low level, and obviously benefiting from quite a unique geology that enables the process that um, Nick, the CEO, has designed, and tested through the small scale production that they've been doing over the last few years.
Yeah, look, the market was expecting some really good news. It's actually down sixpence or 40% this morning. So the market's not very happy by the news. And of course, what it does remind people, it's still a long, long, long way away from production. But there we go. Right. Anything else, Ollie?
Um, well, so I mean, following on from the sort of critical metals theme, big announcement this morning was a 72.5 million Australian deal by St George's Mining. They were actually a very China-focused company for a long time, um, with nickel projects in Australia. But in February of this year, they acquired the Araxa rare earth and niobium project, which is in Brazil. So it's a carbonatite hosted rare earth project, but with a significant niobium component, and it is a niobium project with some rare earths. It's just around the corner from the world's largest producing niobium project, and that's owned by Chinese company CBMM. And why China dominates the niobium market and why it has become a strategic asset. Um, so the interesting thing about the deal is that a third of it was supported by Hancock Prospecting, which is Gina Reinhardt, and this funding should take them through to a final investment decision.
Okay. Yeah. Niobium is very interesting, very useful in again enhancing batteries' performance. So there we go. Right. Is that it, Ollie?
Well, just looking at precious metal equities generally, um, obviously the gold price is now back over $4,000 an ounce. I've briefly gone below on Friday. That's with the sort of trade war news, and silver now $51.5 an ounce. So powering through that 50 level, which people had billed as a key resistance level. I think the precious metal equities, though, they sold off quite heavily on Friday. I think off the back of the Israel peace deal, and certainly the precious metals hadn't moved in that way. So I think that was a bit of a misstep, as it looks like from the Australian trading this morning. Um, they're going to be up strongly in London and Canada, and there are just so many factors that are driving gold and silver at the moment that peace in the Middle East actually is probably one of the least important drives, and have probably started to be priced in even before gold had gone through 4,000.
Yeah, look, as we speak, gold is at 4,076, silver is at 5,162. I mean, it's interesting. At the start of the year, we were predicting that gold could go to 5,000 and silver could go to $70, and everybody was laughing at us. I think less people are laughing now. And I still believe it won't happen overnight. Nothing goes up in a straight line, but that is where we're heading. And actually, gold, they could both go even further because gold could just keep going on. But I mean, the key to all of this, and we've said it so many times on this podcast, is we are in a massive commodities bull market, and you need to have commodity exposure. And on that note, We've done nearly 10 minutes, so that's sort of 2 5-minute morning miners in one morning. Wow, what a way to start the week. We'll call it a day there, Ollie, and we'll be back tomorrow.
Very good.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.